Listen carefully, because what I'm about to tell you is the difference between retiring wealthy and working until you die. I'm looking at data that shows me something absolutely terrifying about people under 40, and it's not what you think. It's not that they're not investing. Many of them are. It's that they're investing in all the wrong things while completely ignoring the one investment that could set them up for life. Before I reveal what this investment is, I need you to do something right now. If you're serious about building real wealth, if you're tired of living paycheck to paycheck, if you want to actually have choices in your life instead of being trapped by financial stress, you need to hit that subscribe button. Join this community because we're building something here. We're creating a group of people who understand that wealth isn't built by accident. It's built by making smart decisions when you're young enough for time to work its magic. I meet young people every single day who think they're being smart investors. They've got money in crypto, they're trading individual stocks, they're chasing whatever's hot on Reddit or TikTok. And you know what? Some of them are making money in the short term. But I'm going to tell you something that's going to shock you. 90% of people under 40 are missing the single most powerful wealth building tool available to them. And by missing it, they're literally throwing away millions of dollars in future wealth. Here's what kills me. The investment I'm talking about isn't sexy. It's not going to double overnight. It's not going to make you feel like a genius at cocktail parties. It's boring. It's predictable. It's methodical. And that's exactly why it works. That's exactly why wealthy people understand its power while everyone else chases shiny objects that ultimately leave them broke. Let me ask you something. When was the last time you calculated compound interest? When was the last time you actually sat down and figured out what happens when you invest money consistently for 20, 30, or 40 years? Most people never do this calculation. They just assume they'll figure it out later. They assume they have time. But here's the brutal truth. Time is the most valuable asset you have when you're young, and most of you are wasting it. Albert Einstein supposedly called compound interest the eighth wonder of the world. He said those who understand it earn it, and those who don't pay it. And right now, if you're under 40 and you're not taking advantage of compound interest in the right way, you're paying it instead of earning it. You're letting other people get rich off your ignorance. I've been investing for decades. I've seen market crashes, I've seen bubbles, I've seen boom and bust cycles that would make your head spin. And through it all, one thing has remained constant. The people who build real wealth, generational wealth, life-changing wealth, they understand one fundamental principle that everyone else ignores. They understand that boring, consistent, long-term investing beats flashy, short-term speculation every single time. So what is this investment that 90% of people under 40 are ignoring? It's not a secret stock pick. It's not some complicated financial instrument. It's not real estate or cryptocurrency or precious metals. It's something much simpler and much more powerful. It's broad market index funds, specifically low-cost total market index funds that you buy and hold for decades. Now, before you roll your eyes and think this is too simple or too boring, let me show you some numbers that will change how you think about money forever. If you invest $500 a month into a low-cost S&P 500 index fund starting at age 25, and you do nothing else, just keep putting in $500 a month until you're 65, do you know how much money you'll have? Over $1.3 million. Let me repeat that. $1.3 million, that's assuming a 10% annual return, which is actually lower than the historical average of the S&P 500. But here's where it gets really interesting. Let's say you wait until you're 35 to start. Same $500 a month, same 10% return, but you've lost 10 years. How much do you have at 65? About $540,000. You lost almost $800,000 by waiting 10 years. 10 years. That's the power of compound interest, and that's why every day you delay is costing you a fortune. Now let's talk about what most people under 40 are doing instead. They're putting their money into individual stocks because they think they can beat the market. They're buying Tesla, Apple, Amazon, whatever stock is popular that week. And some of them get lucky in the short term. They make 20%, 50%, maybe even 100% on a stock pick. They feel like geniuses. They think they've cracked the code. But here's what they don't understand. Picking individual stocks is not investing, it's gambling. And the house always wins when you gamble. For every person who gets rich picking stocks, there are thousands who lose their shirts. And even the people who do well picking stocks rarely do better than the market over long periods of time. The data on this is crystal clear. Over any 20-year period, less than 5% of actively managed funds beat the S&P 500. Less than 5%. These are professional money managers with teams of analysts, with insider information, with resources you can't even imagine. And 95% of them can't beat a simple index fund. What makes you think you can? But it gets worse. When you factor in taxes, trading fees, and the time you spend researching stocks, your actual returns are even lower. Meanwhile, the person who just puts their money in an index fund and forgets about it is quietly building wealth while you're stressing about earnings reports and market volatility. Here's another thing that drives me crazy: cryptocurrency. I see young people putting thousands of dollars into Bitcoin, Ethereum, Dogecoin, whatever the latest crypto flavor is. And when I ask them about their retirement savings, they look at me like I'm speaking a foreign language. They're gambling with money they can't afford to lose while ignoring the guaranteed wealth-building machine sitting right in front of them. Look, I'm not saying crypto can't make money. I'm not saying you should never buy individual stocks. What I'm saying is this: build your foundation first. Get the boring stuff right before you start playing with speculation. Put 80% of your investment dollars into broad market index funds, and then if you want to gamble with the other 20%, go ahead. But don't put the cart before the horse. Let me tell you why index funds are so powerful, especially for young investors. First, they give you instant diversification. When you buy an S&P 500 index fund, you own pieces of 500 companies. If one company goes bankrupt tomorrow, it barely affects your returns because you own 499 others. Compare that to putting all your money in Tesla. If Tesla crashes, you're wiped out. Second, the fees are incredibly low. A good index fund charges maybe 0.03% to 0.1% in annual fees. That means for every $10,000 you invest, you pay $3 to $10 per year in fees. Compare that to actively managed funds that charge 1% to 2% annually. That difference in fees alone can cost you hundreds of thousands of dollars over a lifetime. Third, you don't have to do anything. You don't have to research companies. You don't have to watch the news. You don't have to stress about earnings reports or market volatility. You just keep putting money in every month and let time do the work. This is what wealthy people call paying yourself first. Before you pay any other bills, before you spend money on anything else, you invest in your future. But here's what really separates successful investors from everyone else: automation. The people who build wealth don't rely on willpower or motivation to invest. They set up automatic transfers from their checking account to their investment account every month. They make it impossible to fail. They remove their emotions from the equation because emotions are the enemy of wealth building. I want you to understand something about the stock market. Yes, it goes up and down in the short term. Yes, there are crashes and corrections and scary headlines, but over long periods of time, the trend is always up, always. The S&P 500 has averaged about 10% annual returns for almost a century. Through world wars, depressions, recessions, terrorist attacks, pandemics, it keeps going up. And the people who stay invested through all the volatility are the ones who get rich. Here's a perfect example. During the 2008 financial crisis, the stock market fell about 50%. People panicked and sold everything. But the smart investors, the ones who understood how the game works, they kept buying. Some of them even increased their investments because stocks were on sale. And guess what happened? The market recovered and hit new highs. The people who panicked and sold locked in permanent losses. The people who stayed the course got rich. This is why being young is such a massive advantage. When you're in your 20s or 30s, market crashes are actually good for you. They're opportunities to buy more shares at lower prices. You have 30 to 40 years for the market to recover and grow. You can weather any storm if you have the right mindset and the right strategy. But most young people don't have the right mindset. They want instant gratification. They want to see their money double in 6 months. They want to feel smart by picking the next big stock. They want excitement. And all of that excitement is costing them millions in future wealth. Let me tell you what excitement gets you in investing. It gets you broke. The most exciting investors are usually the poorest investors, the boring investors, the ones who just keep putting money in index funds month after month, year after year. They're the ones who retire wealthy. I want to address something I hear all the time from young people. They say, but what if the market crashes right when I retire? What if I lose everything? And here's my answer. If you're invested properly, market crashes near retirement shouldn't destroy you. Why? Because as you get older, you should be shifting some of your money from stocks to bonds. You should be reducing risk as you get closer to needing the money. When you're 25, you can afford to have 90% of your portfolio in stocks because you have 40 years for the market to recover from any crash. When you're 60, maybe you want 60% stocks and 40% bonds for stability. It's called life cycle investing, and it's how smart people protect their wealth as they age. But here's the key. You have to start when you're young. You can't wait until you're 45 and then expect to catch up by taking bigger risks. That's how people lose everything. That's how people end up working until they die, because they never built the foundation when they had time on their side. I know what some of you are thinking. You're thinking, but I need my money now. I have student loans, I have rent, I have car payments, I can't afford to invest. And to that I say, you can't afford not to invest. Even if you can only afford $50 a month, start there. Even if it's $25 a month, start there. The habit is more important than the amount when you're getting started. Here's something that might shock you. If you invest just $100 a month starting at age 22, you'll have more money at retirement than someone who invests $500 a month starting at age 35. That's the power of starting early. Time is more valuable than money when you're young, and most young people are trading their most valuable asset for immediate consumption. Let me give you a framework for how to think about this. Every dollar you spend today is a dollar that can't compound for the next 40 years. That $5 coffee you buy every morning doesn't just cost $5. It costs whatever that $5 would have grown to over 40 years. At 10% annual returns, that's about $225. So your daily coffee habit isn't costing you $5. It's costing you $225 per cup in future wealth. I'm not saying never buy coffee. I'm saying be aware of the true cost. Be intentional about your spending. Understand that every financial decision you make today has consequences that compound over decades. Here's what I want you to do right now. I want you to open a brokerage account with a low-cost provider like Vanguard, Fidelity, or Schwab. I want you to set up automatic monthly investments into a broad market index fund. Start with whatever you can afford, even if it's just $50 a month. And then I want you to forget about it for 10 years. Don't check the balance every day. Don't panic when the market goes down. Don't get excited when it goes up. Just keep putting money in every month like clockwork. This is the closest thing to a guaranteed path to wealth that exists in the modern world. And here's the beautiful part. Once you've built this foundation, once you've automated your wealth building, you can take some calculated risks with extra money. You can buy individual stocks, you can invest in real estate, you can even put some money in crypto if you want. But you do it from a position of strength, not desperation. The wealthy understand something that poor people don't. They understand that building wealth is not about hitting home runs. It's about getting on base consistently. It's about showing up every month, every year for decades. It's about being boring when everyone else is trying to be clever. I've watched thousands of people over my career. The ones who get rich slow get rich sure. The ones who try to get rich quick usually stay poor. Which one do you want to be? The choice you make in the next few weeks could determine whether you retire wealthy or whether you work until you die. The choice you make right now could be worth millions of dollars to your future self. Don't let your future self down. Don't look back in 20 years and wish you had started today. Time is the most valuable asset you have when you're young. Use it wisely. Start building wealth today. Stop looking for shortcuts and start building a foundation that will last a lifetime. If this opened your eyes, if this changed how you think about money and investing, I need you to hit that like button right now. Share this with every young person you know, because this information could change their life. And if you haven't subscribed yet, what are you waiting for? Subscribe and become part of this community. We're building something here. We're creating a generation of people who understand how money actually works. We're breaking the cycle of financial ignorance that keeps most people broke their entire lives. Your financial future starts today. Make the right choice.